yeah, good evening everyone, I'm Runouska. I am an independent mortgage broker. Been doing it a very long time, I know, it doesn't look it right, but 12 years independent brokering and speaking at these types of events and helping investors along the way. I'm from Midlands Associates, which is my company. So I thought I'd jump straight into it, but talk about the numbers and interest rates. I kind of feel that Mike's just stolen that from me though, and I wasn't aware he was going to cover off some of the inflation and Bank of England rate, but I guess it might be a chance to test if you were listening. Or not, it's my joke, sorry. So, market update, headline rates. So, does anyone remember what Mike said about inflation? Do we know what it is? Anyone can shout out?
3.6.
3.8. That's where it is at the moment. So that 3.8 inflation is stats for August. In July, it was 3.6, and so it's actually jumped up a little bit. Inflation is important because that's what drives the Bank of England rate that sets lending and mortgage interest rates. So it's really important why we track inflation. So inflation generally, if I'm honest, it needs to be at the target of 2%. In 2022, that inflation target, inflation was 11%, and so that's why interest rates were so high over the last 18 months. But we're starting to come down, and actually it's looking very positive. Base rate is now 4%. So again, base rate is what tracks what interest rates are going to be on mortgage rates. And so again, just to give you some perspective, 18 months ago, interest rates were as much as 6%, and so they're starting to come down. And a little bit like what Mike said, we've seen mortgage interest rates as low as 1%, and some of you still might be on those types of rates, but the reality is we're probably never going to see that. And the target is 2%, and we're just going to, it will probably be another 12 months before we're actually seeing interest rates drop and mortgages rates be a lot more attractive. So Bank of England rate is very important, and the aim is next year to try and get to 3%. So a little bit about interest rates. I know it's a little bit boring, but more importantly, on buy-to-lets, interest rates are now down and starting from 2.89%. That does come with very high fees, so the lower the interest rate is, the higher the fees to get that rate. So the typical fee of $999, if you've got investment mortgages, you're looking typically around 4.5%. But if you'd like to have a 2.89%, you're looking at 5% product fee. And then you've got second charges, 5.5%, commercial 6%, bridging 0.5%. So these are all the types of rates that are available on all types of financing, depending on how you're financing your properties. So I'd just like a quick show of hands. So who is in this room is already a landlord and has been one for some time? Quick show of hands. So quite a few of you. And who is an aspiring landlord? We've got a few in the room. Okay, fine. So, if you are an experienced landlord, I'm sure that you'll know the last 10 years in the buy-to-let market has certainly been challenging, right? Do you agree? I think higher interest rates, we've got stress testing on mortgages that never used to be, which is restricting lending. You've got higher taxes, you've got higher stamp duty, so it's all becoming more and more challenging. Does everyone agree? Yeah. But I'm here to tell you how we can make it easier. That's what I'm going to try and do for you today. And I think it's really important that you work with a broker that is going to be innovative, because the traditional way of raising finance on buy-to-lets and HMOs, existing buy-to-lets, new purchases, it's not as easy as it once used to be because of all of these challenges. And so today I just kind of want to run through lots of different ways in which you can leverage your money the best way that you can to help you renovate properties, increase your EPC rating, to buy onward investments, to buy onward properties. And so the first one is, which I think people forget in terms of raising finance, the first way to leverage some of your equity is actually, which we sometimes forget, especially for landlords starting out, is refinancing your existing residential home. If you have equity in your property, you're thinking, how do I buy my first buy-to-let? How do I invest some money into another property? Sometimes just starting with the basics of refinancing your existing home actually can be an easy way to leverage some of your equity that you have. Now, typically, I was speaking to someone earlier, actually, the first thing that comes to our mind when we think of a residential mortgage is, I need to pay it off. How do I overpay? But actually, that's great, but if your mindset is, I want to invest, then actually that's another way that you can do that, is releasing equity very quickly, and it's all based on your personal earned income. So that's one way you can release equity. The next one is simply remortgaging your buy-to-lets. Now, if you've been a landlord for a long time, that has become increasingly difficult because of stress testing and the way that they calculate how much they'll lend you. But just a little tip, when you come to refinancing your buy-to-let, you're trying to release equity, one little tip is consider a 5-year fixed. The longer that you fix, the more likely the lender will lend you that little bit more, and that little bit more could make a difference. And then you've got things like second charges. So second charge is, just to explain it really briefly, your property is your property. A charge is placed on your home if you have any financing. That's called, the first lender that does that is called a first charge lender. And the risk to that lender is very low. But a second charge becomes the second lender. And typically you need to get approval from your first lender in order to get that second charge. So, second charge lending, the rates are higher, but they're more lenient on how much they're willing to release and give you. Those that consider second charge usually like their first charge lender. They might be with Halifax or a typical buy-to-let lender on a really good rate. And so they don't want to lose that by remortgaging. They want to keep that, and actually you can get a second charge mortgage or a loan on that property, which would help you release some of the equity. So you can do that both on a residential home that you live in or one of your buy-to-lets. You then have really quirky things. So some buy-to-let lenders allow you to have a revolving credit facility. So if you were at the auction earlier, you will probably like to be in a position where you've got the cash or you've got the funds readily available. And one way that you can do that, and if you're aware of auctions, mortgages, it's a little bit longer. You'd like to be in the best position to complete on that and exchange on that auction property. So some lenders give you a pre-approved credit facility. So essentially it's already pre-approved. You haven't drawn down any of that fund, but it's there in place. You can have it in place for 6 months or 12 months, but that's another way of being able to have access to cash, especially in the scenarios at an auction. But yeah, that's another way that you can have some of your equity